Joining us right now is Minneapolis Federal Reserve President Neel Kashkari. Good to see you, sir. Thanks so much for joining us.
Good to see you, Maria. Thanks for having me.
Well, this created a lot of conversation and debate online. Let me ask you, in terms of too big to fail, what specifically would you like to see Congress do when you say we want them to go further?
Look, there are a number of transformational solutions out there, everything from breaking up the banks to putting so much capital in them that you turn them into a utility so they virtually can't fail, to taxing leverage across the financial system. In the immediate aftermath of the crisis, when Congress debated Dodd-Frank, I think they basically took the transformational solutions off the table, said now's not the right time, let's just fix what we've got. Well, here we are 7 years later, and I'm saying that the biggest banks are still too big to fail. We do need to take transformational actions, and we in Minneapolis are going to bring experts together from around the country, put all the options on the table, and give Congress a chance to weigh in and hopefully go further.
Let me take you back to the dark days of 2007 when you were really so critical in your advice in terms of what the country needed to do. Here we are looking at a situation where seemingly strong banks needed an enormous amount of capital, like a Morgan Stanley.
Sure.
Okay, so there you have J.P. Morgan, strong, powerful, big bank, arguably too big to fail. J.P. Morgan was able to acquire Bear Stearns. It was able to acquire Washington Mutual. Basically, it bailed out the government. Well, is that a misstatement?
I think that's a misstatement. I think that some of the big banks said, well, we were so strong we didn't need it. First of all, some of the banks were begging for help.
Not J.P. Morgan.
Well, okay. But if all of J.P. Morgan's major trading partners had gone in bankruptcy because the U.S. taxpayers didn't step in, how would J.P. Morgan be doing? Yeah, this is ridiculous.
Okay, but you're asking a question that didn't happen. You're asking, right?
I know, but that's only because the federal government and the taxpayers stepped in. So when Jamie Dimon says we were always so strong, but if all of their counterparties were in bankruptcy, forget it. The only reason Wall Street survived is because the American people stepped in. And what I'm saying is, let's be honest with the American people. We have not addressed all the risks. The banks are stronger today than they were 8 years ago. They do have more capital. They do have better liquidity. But have we taken the risk of a financial crisis off the table? No, we haven't.
But what about all these companies, large companies like the IBMs of the world, that need complicated financing that only a large bank can deal with? And that's what Jamie Dimon would push back on. I've asked Jamie Dimon this question a lot, and he says, absolutely not, we're not going to break up this bank, because the country needs a large bank in order to give solutions to some of these multinational companies that need such lending.
Yeah, I don't find that persuasive.
You don't find it persuasive?
I don't find it persuasive. Big companies do business in countries all around the world, and they manage thousands of parts suppliers all around the world. You're telling me they can't manage a few more dozen banking relationships? We have 7,000 to 8,000 banks in America. Some of the small and mid-sized banks can grow and expand and fill some of the voids that may be created if we end up transforming our biggest banking sector.
All right, let me ask you this. Let me push back on another idea here, because some of the Asian banks today are among the biggest banks in the world. You got a company like a Chinese bank, like an HSBC. How is it possible that if you break up the banks in the U.S., they're not going to be at a disadvantage to some of the Chinese banks, the Asian banks right now, that are bigger than the U.S. banks?
Well, look at it this way.
Doesn't all the business go there?
We have to focus on what we can control. I wish we could control everything all around the world. We can't. We're the United States. We should start by doing what's right for our country, for our taxpayers, for our citizens, for our economy. And then maybe we can get other countries to follow. But at the end of the day, if other countries want to take extreme risks with their financial systems, that's up to them. Let's protect America, and maybe we can lead the world in a safer direction.
Anthony Scaramucci earlier asked one of our guests. We had Dennis Scholl on, actually, who worked with Barney Frank on the Dodd-Frank legislation. He said, Did Neel Kashkari check with Janet Yellen before he made this statement?
The structure of the Federal Reserve System is the regional banks are independent of the Board of Governors. And the idea that Congress had 100 years ago is a diversity of opinions. And I'm looking forward to getting all the feedback from my colleagues across the system.
So you didn't need to see if she was on the same page as you on this? Because some people think she's not on the same page as you.
Well, you know, I looked at her testimony last week in Congress, and she said we have made progress, which I agree with. But it's too soon to declare victory, which I also agree with. And there may be differences of opinion around the margin, but I look forward to getting her feedback and working with her.
What a fascinating new position you have right now, running the Minneapolis Federal Reserve. How has your life changed? Tell me about your first FOMC meeting that you just went to.
It's great. First of all, the Minneapolis Federal Reserve Bank is a terrific institution, 1,000 employees, a long history, by the way, of leadership on addressing too big to fail. So there's a lot of expertise in the Minneapolis Fed that I'm able to work with and tap into. We have a great research department of research economists as well. So it's a great environment, very intellectually curious, focused on important economic issues.
On the subject of interest rates, we just had Mark Yusko on, a major investor, particularly in technology. He says any interest rate hike is off the table from the Federal Reserve. Is that correct?
We're data dependent. You hear us all say that over and over again, and it's true.
Neel, the data stinks, okay?
Well,
earnings are down 4% year over year, right? When you look at the most recent quarter, the industrial side of the economy is in recession already. Do you agree with that?
Well, we have a dual mandate. Our dual mandate is price stability and maximum employment. And so we're going to keep watching. Hopefully, we're going to keep driving job creation. The U.S. economy will keep generating a lot of jobs, bring people who are left the labor force back into the labor force. That'll be a really good thing for our country. And hopefully, we can make sure we get inflation back up to our 2% target. So we're going to watch the data and make the right call.
What did you think about Bernie Sanders being delighted by your comments about the too big to fail thing?
You know, the Fed is a non-political agency. I'm not allowed to comment on politics, so I'm just going to let that pass.
So you're not feeling the burn, Neel Kashkari?
You know, I'm watching the election with great interest, as all Americans are, and look forward to seeing who the next president is.
But you did run as a Republican when you ran for president.
Well, for governor.
For governor, pardon me.
And, you know, my political history is well known, and that is what it is.
Anybody out there have your sensibilities? Not that you're supporting that, but that these sensibilities in terms of too big to fail, in terms of where the economy is right now?
I think there are people on both sides of the aisle who think we need to address the too big to fail issue, that we have not done enough. And what I would hope to see is, through this process that we're launching in Minneapolis, that we can bring people together from both sides of the aisle and say, yes, let's work together and let's address this once and for all.
Neel Kashkari, great to have you on the show today.
Thanks for having me.
Thank you so much for joining us. Neel Kashkari is the president of the Minneapolis Federal Reserve.